Welcome back. You are watching our special broadcast. With less than 2 weeks to go for the union budget, the business community expects the finance minister to bring in measures to trigger growth across sectors, specifically around tax policy. The industry hopes these reforms will drive innovation, manufacturing capabilities, boost investments. The US-India Strategic Partnership Forum has chalked out key recommendations for the union budget, and here's a breakdown of their key asks. The USISPF expects the government to include corporate tax reforms aimed at enhancing competitiveness. The forum also expects further simplification of GST compliance procedures and sector-specific concessions to boost sectors. In addition, these demands, the USISPF is also expecting incentives for digital infrastructure development and initiatives to boost domestic manufacturing. To discuss this further, we are now joined by Mukesh Aghi, President and CEO of US-India Strategic Partnership Forum, and Shefali Goradia, Chairperson at Deloitte India. Ladies and gentlemen, thank you for joining us on the program. Mr. Aghi, if I can begin with you first, what would be your top ask as terms of the budget is concerned? What could the budget do in terms of bringing more investments, bringing more manufacturing to India?
Well, I think if you look at the government agenda, is to create more jobs. And you can create more jobs with more investment. That means bringing in capital. And when we talk to US companies, when we talk to international companies, they're saying simplify things. Simplify the tax structure, simplify the dispute resolutions, expedite the process itself so we are able to move things. And I keep on pointing, look at the example of Vietnam, which has been able to attract so many Chinese companies. They have simplified everything, speedy process, and we are able to move things. So if you look at overall arcing suggestion, we have simplify, expedite, and move forward from there.
Right. So simplifying regulations, expediting the approval process. Shefali Goradia, if I were to move forward from there, if we drill it down to the basics, what are some of the absolutely needed ease of doing business measures that we need in the Indian economy, which you feel should feature in the budget?
I think in addition to what Mukesh spoke about in terms of simplification, I would also like to add rationalization. And one of the long pending asks from the industry has been rationalizing some of the rates. We've got just too many rates, whether it is capital gains tax or tax reduction at source. And in order to give the compliance ease, it is imperative that the government further streamlines these rates. And even, doing away with, filing the TDS certificates. If we already have certain forms which capture the data, there is no need to, have additional paperwork being done. So there are small asks. And if we fix that, it will significantly improve ease of doing business.
Right. When it comes to the possibility of rationalizing the capital gains structure or simplifying it, what realistically can we expect?
I think, in terms of, whether it is a long-term rate or a short-term rate within the same asset, same category, we have multiple rates for different asset classes. So, bringing some parity between, long-term assets or short-term assets or debt or equity or listed stocks versus unlisted stocks, I think there is a huge scope to rationalize the rates. There is also the ask about removing certain withholding taxes. And if we are able to bring all of this together, it will bring a very simple and efficient capital gains tax regime. On the indexation front, again, there are certain capital gains which are eligible for the indexation, whereas some other types of capital gains are not eligible for the indexation. And again, the ask has been to kind of meet midway and give a simple and a straightforward regime, which is easy for all investors to apply. So that's one thing definitely that we can look for. And again, on the capital gains tax, one of the other development in the recent past has been that many companies or startups that had been set up overseas are now looking to move back into India, internalize their operations again, and giving some kind of tax neutrality to such restructuring would also go a long way in bringing some of these companies back home.
All right, those are important points. Now, taking it forward with Mr. Aghi, Mukesh, when it comes to the investment scenario in India, or top sectors where you expect a lot of investment activity, what would those be? And would there be any sector-specific asks if we were to ask you about 3 key segments of the Indian economy?
Well, I think I can talk more from a services perspective. When you look at the Global Capability Center, India is a gold mine for that. You are able to leverage the brain power of Indians. We have now almost 1,600 GCCs in India, exporting roughly $121 billion for exports. But more important, they're generating tremendous amount of IP in the country itself. And I think if we just focus on that and reach out to almost every Fortune 500 companies and beyond itself and provide some kind of an incentive to come in and set up GCCs in India, it will create tremendous amount of job. The second factor is obviously healthcare. As the country's young population ages, you need affordable and scalable healthcare. Medical devices companies basically need to come in and set up, and we need to create incentives so they're able to build devices which are available, affordable for the people, not only just for India, but Africa, other emerging markets itself. And the final thing will be electronics. And the country has done well by attracting in the semiconductor space, but we have to go beyond semiconductor space. And before that, some basic ingredients of that, and that includes critical mineral processing in India itself. So I think if you look at those 3 broad segments, focus on them, that's going to create a momentum of FDI investment, that's going to create jobs in the country itself.
Right. As someone who deals a lot with US and India businesses, would you like to highlight certain pain points that US companies have been facing for which they would be looking at the budget very closely?
I think it may not be as related to the budget, but I think the regulatory environment has to be reformed. KYC, every different regulator has their own KYC. Tremendous amount of energy goes in providing that itself. But more important is the regulatory environment has to move on to the 21st century itself. Businesses are willing to focus on building businesses, not spending time and energy in trying to feed data to different regulators itself. It is important that they get the data. Let's streamline that. So business focus on investing and creating jobs itself. Then I think dispute resolution. It is important that every time there's a disagreement, goes to the court. Expedited process also take years to go through. And what happens is companies have to take those amounts on the balance sheets. And it hurts them from a capital investment perspective also. We need to have off the court dispute resolution in an expedited manners.
Right. Shefali, coming to you, give us a sense of what the common man can realistically expect from the budget. Do you feel that it is important for the government to come out with certain measures which will encourage demand creation and up the consumer sentiment?
Absolutely. I think that, that is one thing that we should definitely expect in the upcoming budget. These are small things, but I think, they would go a long way in putting some more money in the hands of common man. And just increasing the standard deduction from 50,000 to 100,000. I think that itself is going to be a big motivator. And there has been, the government has been very keen to transition everybody from the old tax regime to the new tax regime. And if they are able to move up the basic exemption slab from 3 lakhs to 5 lakhs, that will again, put more money in the hands of the common man. Today, even with the lower exemption limit, up to 7 lakhs, a common man pays 0 tax. But with increasing the limit from 3 lakhs to 5 lakhs, it will certainly, be a big morale booster for them. In addition to the slab rates, there has been an ask again from some of the high net worth individuals to reduce the highest tax rate from the current level of 42.7% almost, and bring it down to a more reasonable 35%. Introducing one more slab rate and increasing the higher slab would go a long way in putting, that kind of clarity.
Right.
2 more asks.
Right. Please go ahead.
2 more asks from a common man perspective. I think just, some deductions that are being given, including, one on the interest, could definitely increase because it has been at a very low amount to bring in all types of interests, not just the savings interest, and offering a 50,000 exemption would again help. And increasing the 8IC limit from the current level of 150,000 to 250,000 is again something that we should expect in the upcoming budget.
All right. And finally, my one quick question to both Shefali and Mukesh. This would be on attracting the investments which were meant for China, but those countries are considering investing in India. How do we make sure we are able to leverage that sentiment currently? For example, in terms of electric vehicles, the EU has slapped duties on Chinese cars. The US has slapped duties on Chinese cells and Chinese electric cars as well. What can we do to make sure that those investments, those alternate manufacturing destinations actually come to India now?
Well, I think India did a good job of streamlining the policy. And you do have, almost we had Tesla coming in. And you have a couple of companies from Vietnam, others coming in. I think it's important that we basically reach out to these companies specifically and the whole supply chain and talk about why India is important. And you have to understand, Chinese car companies will not come into India. So this is one country in the world with a large growing automobile market. These companies can compete locally without Chinese company being there. So I think lack of China's presence is a big attraction for these companies, and we should tell the story to these people.
Right. And Shefali, do you feel that not just the automobile industry, be it any sector for that matter, any manufacturing sector, how do we attract those investments which are meant for China, but companies are considering India and other jurisdictions in Southeast Asia as an alternative?
I think one of the low-hanging fruit there would be just extending the sunset which is there on the new manufacturing units by another 3 to 5 years. And, offering a rate of 15%, which is highly competitive, could go a long way in that. And plus, doing some things around customs, giving more clarity on the valuation rules, intercompany transfers. I think those kind of things could go a long way. And, as Mukesh already spoke about the disputes, a faster resolution. And from the government side, being more proactive and quickly resolving any upcoming dispute could be very helpful and could send some very positive signals to the international investor community.
All right. We've run out of time, but thank you very much, Shefali Goradia and Mukesh Aghi, for joining us here in our studios, coming up with their wish list for the union budget. And let's see what Nirmala Sitharaman delivers on the 23rd of July. That's all we have time for on this special program. Thank you for watching. Goodbye.